Hey, good morning, everybody. Today is Tuesday, August 11th, 2015. My name is Cliff Backus, back from an extended vacation, and this is your daily video market review. Up until yesterday, stocks have been acting poorly from the bull's perspective. Yesterday, stocks advanced sharply, but trading volume was mixed, offering little encouragement to the bulls or the bears. We've been in a directionless, kind of sloppy market since the end of June, as the bulls and bears have wrestled for control of the market. The S&P 500 recaptured its 50-day moving average yesterday after again testing support at its 200-day. The S&P 500 and the IBD 50 recorded accumulation days yesterday, while the Nasdaq and the IBD 85 stubbornly didn't. An accumulation day is a session where one of the major market averages posts a higher close on heavier trading volume than the prior day and is a sign of institutional buying in the market. An accumulation day is bullish. The fact that the Nasdaq couldn't confirm the accumulation on the S&P leads us to continue to be cautious in the market. Advancing issues bettered decliners by about 3-2 yesterday. The New York Stock Exchange advanced decline line continues to look bearish and has looked bearish since mid-May. New lows bettered new highs. We have to go all the way back to July 15th to find a trading session where new highs bettered new lows. Our market timing model is showing an aggressive buy signal on both the Nasdaq and the S&P 500. Meaning that aggressive traders may want to buy here, but conservative traders should continue to accumulate cash. The O'Neill model is showing an uptrend under pressure. Our distribution count is reasonable on the Nasdaq, but extremely high on the S&P 500. Large capitalization stocks continued to handily outperform small yesterday, and are outperforming on a 10-day moving average basis. Our swing timing model is indicating a neutral condition in the market. Overall, we're neutral at this juncture in the market. We've been getting both bullish and bearish signals in the market. The major indexes have made no appreciable progress since February and have become increasingly volatile. Caution's advised. This is a time to err on the side of caution. Okay, what we're looking at here is a list of 177 industry groups sorted in HGSI, High Growth Stock Investors, by 5-day percentage price change. The reason we look at this is that by noting where the strength in the market is on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum investing, which is what we're doing here, is that we need to identify where the power is and get out in front of it. So let's see where the strength in the market has been this past week. In the past week, we've seen transit services up 11.1%, other consumer products up 10.7%, steel raw material suppliers up 10.2%, cement and aggregates up 9.1%, and industrial maintenance services up 9%. Let's take a look at the Russell 2000. I want to start today with the Russell 2000 because the Russell 2000 has entered into a fairly significant downtrend here. Notice how the Russell undercut support down here in the 2011 area. We've produced a series of lower highs and lower lows out of the Russell 2000. And right now, on a short-term basis, Russell 2000 is looking pretty bearish. Let's take a look at the Nasdaq Composite. The Nasdaq yesterday was up 58.26 points, or 1.16%. It closed at 51.01, and we held this minor level of support right here. 2 days ago, the Nasdaq tried to break below that minor support, but managed to close above it. And yesterday we recaptured the 50-day moving average, which should give some encouragement to the bulls. Note that trading volume yesterday was lower than it was the prior day, so we didn't get an accumulation day on the Nasdaq. For you followers of William O'Neill, we are in an uptrend under pressure. We have 3 distribution days in the past month, which is reasonable for the bulls. Right now, the Nasdaq is bracketed by support down here in the 48.88 area and resistance up here in the 51.64 range. We are currently on an aggressive buy signal on the Nasdaq, which means that aggressive traders can be accumulating stocks on the long side here, but more conservative traders are going to want to continue to accumulate cash. See what the S&P 500 was up to yesterday. S&P was up 26.61 points or 1.28%. It closed at 2104 yesterday. The S&P really has been directionless recently. We've seen a lot of volatility out of the S&P. Notice how these bars are very much bigger on average than they were back in this area. Let's get these marks off. Yesterday the S&P recaptured its 50-day moving average. Trading volume was heavier than the prior day, giving us an accumulation day. The S&P is on an uptrend under pressure right now, and we have seen a lot of distribution out of the S&P in the past month. We have 7 distribution days. That compares to 3 distribution days on the Nasdaq. The S&P is bracketed by support down here in the 2044 area and resistance up here in the 2134 range. And the S&P, like the Nasdaq, is currently on an aggressive buy signal. Conservative traders want to continue to be cautious here. Before we go, I want to take a look at 3 stocks. Zebra Technologies manufactures direct thermal and thermal transfer printers, RFID printer encoders, and dye sublimation card printers, whatever that means. The stock is right now in a second stage base. We get a 64% checklist rating. We have a pivot point on Zebra Technologies of 119.47, and we have this downtrend. Zebra Technologies yesterday traded higher trading volume than any down day in the past 10 trading sessions, which is the definition of a pocket pivot. Zebra Technologies closed at the top of its daily trading range, and it should be noted has resistance at its 50-day moving average. Zebra Technologies also comes out with earnings this morning before the open. If the stock opens higher today, it may be a good investment right here in anticipation of the breakout above the 50-day moving average and above trendline resistance. It would be a good opportunity for aggressive investors to get into it before it takes out this pivot point in the 119.47 area. Next, let's take a look at G-Pro. G-Pro manufactures mountable and wearable cameras and accessories for the self-capture and sharing of content. The stock broke out of this first stage base recently in the 61.19 area. We get an 80 checklist rating, and yesterday we put in a real nice pocket pivot right here, trading higher volume than any down day in the past 10 trading sessions, as we bounced off of the 10-day simple moving average and put in a new high. G-Pro, again, can be bought by aggressive traders here on the pocket pivot. Gives us a secondary opportunity to get into it after the first stage breakout. And finally, CyberArk Software is an Israeli provider of network security software focused on protecting privileged accounts in commercial enterprise. The stock has been working on this third stage base with a pivot point up here in the 76.35 area. CyberArk gets a 72% checklist rating. The stock yesterday broke above its 50-day moving average, which is bullish, closing near the top of its daily trading range, actually closer to the middle of its daily trading range. Trading volume was higher than any down day in the past 10 trading sessions, giving us a pocket pivot and an opportunity to get into CyberArk ahead of the breakout in the 76.35 range. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs, Incorporated believes to be accurate. Ohannes & Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.